I'm Emily Chang, and this is Bloomberg Technology. Coming up, Intel's fourth quarter win, despite revealing major security flaws in its chips, why Meltdown and Spectre made little impact on the chip maker's bottom line. Plus, Robinhood moves its commission-free trading model into the crypto space. But will its army of 3 million millennials buy in? And the responsibility of tech companies to fight addiction. We will hear from billionaire investor George Soros, as well as Nest co-founder and former Apple exec Tony Fadell. That's ahead. But first, to our lead. Intel shares gained about 4% in late trading after the company released better than expected earnings for the fourth quarter of 2017. The chip maker is signaling optimism that demand will persist, even as the industry scrambles to fix a vulnerability in its PC and server chips. For now, that vulnerability may be helping Intel as computer owners retire older systems and upgrade to secure them. Joining us now, Tech Analysis Research President Bob O'Donnell and our Bloomberg Editor-at-Large, Corey Johnson. So, Corey, the stock is up. How surprising is it?
Look, if this company can grow data center business not by low double digits, but by 20%, which is what you saw in this quarter, it bodes quite well for this business. The PC business shrunk by 2%, still a bigger business than data centers, $9 billion. But the margins are much better in the data center, and the growth in data center was just jaw-droppingly fast. So the question is it really growing that fast? Is the data center business going to grow at the pace that we're seeing from what Microsoft tells us, not from the pace that we're seeing from what Amazon Web Services tells us? Amazon has great growth. Microsoft's growth is even better off a smaller base. If the industry is going to grow that big and Intel's going to sell all the chips in the industry, and make no mistake about it, Intel sells all the chips into that business, that's fantastic news for Intel.
What have they said about the chip flaw?
Well, the chip flaw, first of all, remember, really didn't get public till the beginning of this quarter. So it's not a surprise that there's no impact in Q4. But even looking forward, I mean, obviously this is a big industry-wide issue. It does impact others besides Intel. Intel's working hard to fix it. I think in the long run they're going to be okay. Short term, there could be a little bit of a benefit, as you mentioned. There are some performance issues they're dealing with, but those are slowly but surely getting better. And as Corey said, Intel owns a huge part of the data center market. Not quite all of it. AMD is making a play there, but the vast majority, obviously.
You're right. Only 99%.
Okay, do you agree that we're not going to see a big impact from this flaw in the ensuing quarters?
You know, you know what? Sure. Well, so I think it's a big deal, right? This package yesterday, Omar, one of our great producers, helped produce this great package about the security flaw, and I think it's an important problem. But where else are they going to go? I mean, and let's throw in, how many companies do we know that are developing their own processors, which is an amazing notion. I mean, it was unimaginable 10 years ago that Google, Apple, Facebook, not Microsoft, and Amazon Web Services. So 4 of the largest data center builders out there are developing their own semiconductors for something.
Right.
The notion that they would go in and white box chips is pretty crazy given how difficult, pretty amazing, I should say, better word choice, given how difficult it is to make a semiconductor. I get making a customized server. You can make a server probably better than Dell can do it. But to make a semiconductor better than Intel is an audacious notion. That could be competition way down the line for Intel, but not this quarter, not this year.
No, exactly. And the thing I would say is, look, what we're also seeing, let's not forget, is an expansion of where those semiconductors are going. So that traditional core data center business, Intel can have a piece of, these other companies can have a piece of, and there's all this edge computing stuff. And we're seeing a lot of those semiconductor developments being done for other devices. They're going to extend the reach of the cloud and the edge. And that's
Apple's developing for this.
Obviously, Apple's developing for that, but those other guys are going to develop for other kinds of devices that we don't even know what they are yet, right?
How do you square this trend with the overall consolidation of the chip business?
Well, Intel is the biggest player in the chip business, right? So the big players are still...
Broadcom's trying to buy Qualcomm.
Yes, but the big players are still doing well. The reason why there is so much consolidation, I would argue, is because they do see we're starting to get intelligence embedded into our microwaves, into everything. Obviously, automobiles and all the developments there, but because there's so many different places this stuff is going, and the IoT market and all those things we've been talking about for a long time, all of that creates data, which in turn creates demand for data centers. Now, I will say one thing to what Corey had said. Yes, Intel had amazing growth. let's be honest, I think that may be hard to replicate that kind of data center growth on and on and on at that digital level.
What I said was, if they can keep doing this.
Yeah.
I don't know if they can keep doing this. And if they've got a brain in their heads, and they certainly do, they're not going to promise 20% growth in the data center business. They're rather surprised like they did here today. But to your consolidation notion, the acquisition of Mobileye, really expensive deal, but it adds their Internet of Things groups. All those little chips that you're talking about, that business for Intel was $3.2 billion in the 13 weeks of the quarter. It was 21% year-over-year growth.
Right.
They are growing in IoT also, and it's a very big, serious business for them. It's not the size of their $9 billion PC business. It's not the size of their $5.6 billion business, or I should say $19 billion annual business in data centers, but still do $3.2 billion, which is about 1/10 the size of their $34 billion annual PC business, is a big deal.
Yeah. All right, Intel CEO Brian Krzanich speaking right now on the conference call. He has said that they have made progress on the security flaw. Wouldn't expect him to say much else.
That's it? They haven't fixed it? Yeah. How about we fix it? We're done. That's progress.
They're increasing the dividend. You talked about the data center business. What are the other highlights you'd pull out of this report?
Well, look, first of all, the PC business, even though it was down, wasn't as down as far as a lot of people expected it to be. That's a good sign. So at some point, we expect that to bottom out, and then we see some more, a solid base. And as Corey pointed out, things like Mobileye and these other kinds of technologies, they're doing neural network-based chips. They're doing video processing-based chips for AI and machine learning applications. Those businesses are tiny now, but they are going to grow long term, and that's what the company's trying to do, is broaden the reach of the technologies that they can influence.
All right, Bob O'Donnell, president of Technalysis, and our own Corey Johnson. Thank you both. All right, make sure to tune in Friday, Corey's interview with Intel CFO Bob Swan. That'll be happening 11:30 Eastern, 8:30 Pacific time. And Apple is getting ready to take on Amazon in the ebook business again. In 2012, the Justice Department sued Apple and book publishers over its first effort. That resulted in a $450 million fine. This time, though, Apple is working on a redesigned version of its ebook reader app for iPhones and iPads. Amazon has just over 83% of the ebook market in the United States. And in deal news, Amazon is in talks to buy Box.com. This according to a report in the New York Post. This comes as grocery store chain Kroger also showed interest in the company, known as the Costco for millennials. If Amazon does buy Box, it shuts down Kroger in getting a footing in the e-commerce space, which it needs in order to compete with another Amazon property, Whole Foods. Coming up, Robinhood Financial is getting in on the crypto craze by launching trading for Bitcoin and Ethereum. Can it keep up with customer support issues around digital currencies? We'll speak with Robinhood's co-CEO next. This is Bloomberg. Robinhood Financial, which makes a free stock trading app aimed at younger customers, is getting into cryptocurrency. The firm is launching commission-free trading for Bitcoin and Ethereum next month. The move could be a big asset for the company, but also comes with a lot of risk. We're joined now by Baiju Bhatt, co-founder and co-CEO of Robinhood Financial. Baiju, thank you so much for joining us.
Thanks for having me.
So how challenging was it getting this off the ground?
So we had been working on it for the better part of the year. So we started working on it in the beginning of the spring of last year. And the technological work we'd done a decent bit of on our equities business, which made it more straightforward. So there were business and regulatory pieces that we had to put into place.
You're taking on entrenched incumbents. What do you have on Coinbase, for example?
We actually are pretty happy to have other market participants in this industry. I think if cryptocurrencies are going to live up to their full potential, we're excited to have other people in this industry as well. And we are very good at building consumer products. We've done an amazing job of introducing a new generation of consumers to the equities markets, and we think we can do a great job here as well.
Companies like Coinbase have had a lot of issues with support and load times. Are you worried about that, and what are you doing to prepare?
So uptime and availability is something we take incredibly seriously. So as a broker-dealer in our equities business, we're held to an incredibly high standard where we have basically zero downtime as acceptable. We offer tens of thousands of securities in U.S. equities and ETFs, maybe 100,000 stock options on top of those that we offer today. So we've got a lot of expertise doing that, and we're excited to be able to offer that same uptime for cryptos.
What's your outlook on Bitcoin and cryptocurrencies? Are you worried that you missed the top?
I don't think so. I think one of the things that makes this really exciting for us is the inevitability that cryptocurrencies have. There have been a couple of times over the last decade where people have counted it out, it's gone up and it's gone down, but each time it's bounced back. We think that that is something that's really amazing about it and gives it really long staying power.
How big a revenue driver will this be for you?
So we're offering cryptos for commission-free on Robinhood, and for our business, we see it primarily as a way to accelerate our user growth. So our primary interest in this is to see how much we can add to the baseline growth. With the current business, we plan to break even on it. So that's kind of how we look at it.
Now, you guys get fascinating data on what kind of stocks users are buying. What trends are you seeing that are the most surprising?
The trends that we see that have been pretty consistent over the last few years of Robinhood is that there's a lot of interest amongst younger consumers in companies like Apple, Tesla, Facebook. The really big consumer brands, our consumers tend to be buy and hold investors with those. And yeah, I think it's been really interesting to see.
So not necessarily that surprising, would you say?
Maybe it's not that surprising, yeah.
So, talk to us about bigger picture growth. You've got more than 3 million users. You're up against some bigger players. How do you get a bigger piece of that pie?
I think the way we do it is we stay very mission driven. Like, the point of Robinhood is to build a different kind of financial services company, one that's aimed at giving the benefits of the financial services industry to the rest of us. For too long, the finance industry has been one that's really helped people that have more money, that are established players. If we stay true to that mission, that tends to be a really good guiding light, because there are so many consumers in this country that would love to be a bigger part of the system. And each time we offer one of these new products, whether it be commission-free stocks and ETFs, commission-free options that we announced in December, and now commission-free crypto trading, each time we open a new market.
So what's your long-term outlook on the business? I mean, are you going to try to raise new funding? Are you going to look for a buyer? What do you see in Robinhood's future?
We'd like to go public someday. This is something that we are actively working towards. The time horizon is still the next few years, but we're quickly becoming one of the largest broker-dealers in the U.S. And with adding cryptocurrencies and all this other stuff, we're on a path to doing that.
Are you profitable, or will you be soon?
So we're not commenting on that right now, but we'll stay tuned.
All right. Baiju Bhatt, Robinhood co-founder and co-CEO, thank you so much for stopping by. All right, coming up, the world according to George Soros, the billionaire investor speaking from the World Economic Forum in Davos, saying Facebook and Google deliberately engineer addiction to the services they provide. We'll hear from him next. And if you like Bloomberg News, check us out on the radio. Listen on the Bloomberg Radio app, Bloomberg.com, in the U.S. on SiriusXM. This is Bloomberg. We have breaking news out now from President Trump at the World Economic Forum in Davos. The president saying that he will support a path to citizenship for 1.8 million so-called dreamers, saying he would double the pathway for folks qualifying under the DACA provision. We're going to continue to follow this story. More headlines as I speak now, crossing on the Bloomberg. Meantime, at the World Economic Forum in Davos, we've been speaking to the biggest CEOs and world leaders from around the globe. Bloomberg's Haslinda Amin sat down with CA Technology CEO Mike Gregoire, who says companies need to fight cybersecurity like a disease. Take a listen.
You have to stay on top of it all the time, and there's no end in sight. You have to be vigilant. The ways and the threat vectors continue to increase. We have improving but not perfect cooperation between companies. We have improving but not great cooperation between governments and other governments, and it's a global problem. So if you solve that problem in one particular country or one particular server, how do you make sure that everybody else has an opportunity to understand that threat vector has been solved?
Why have governments and companies been so slow to rectify the issue?
First of all, it's extraordinarily complex. And secondly, if you're a public company, for example, and you've been compromised, you have a duty of care to your shareholders, you have a duty of care to your customers, and you want to be thoughtful about that before you disclose it. And to the extent that you do disclose it, you want to make sure that you're indemnified because you've been helpful, and you don't want to be penalized because you've been helpful. There's no real, regulation and rules that have caught up to the constant attack we're seeing from multiple different threat vectors.
We had the Intel chip disaster. How will that impact cloud computing?
Well, I think every cloud computing vendor jumped on it as quickly as possible and started doing patches and remediation. I think testing has gotten better with respect to ensuring that you have these types of threat vectors marginalized. You're never going to be 100% sure that you're not going to be infected. So you have to be diligent on a regular basis, and to the extent that you can get into consortiums. And I was at a CISO meeting this afternoon where we started talking about sharing what we're seeing in different processes and different procedures. But one of the things that I'm not sure most people understand, I think more people die from the cold than other infectious diseases. There are more very violent security attacks from very simple phishing and just lack of duty of care on an employee that answers an email that incorrectly, or a operations staff that might be too overwhelmed and doesn't apply the appropriate patch, or a complex infrastructure that doesn't understand you have to do this process before you do the second process. These are all things that are relatively easy to vaccinate on, and if we can get just that done, I think we will really tamp down the threat vector.
Google and Amazon have come out to say that they have fixed the problem. Do you think we'll see more?
They have fixed that problem. Do I think we'll see more? Unfortunately, yes, we will.
Why is that?
You have to understand that you're only as strong as the weakest link in the chain. And now you might not see that particular problem again, or it'll be a variant of that particular problem. But when you take a look at the different constituencies that are attacking, you have criminal activity, which is probably the most common. You have nation-state activity, and then you have just plain malicious activity. And each one of these actors, the barrier to entry, or what it costs for them to do the hack, is relatively low. What it costs for us to protect it is relatively high. So we've got this economic, impasse where until we make it very difficult for them to hack and more expensive, I think they're going to continue to be creative.
I want to talk about AI. It's transforming the way we communicate, do business. Yet, only 10 to 15% of CEOs know what the next big technology investment would be. For those who do not have a clue where their money should go, where should it go to?
Security first. I would make sure that whatever you're doing, you feel that you've done everything you possibly can to protect all of your assets from cyber attack. If you don't do that, I think you're going to be put at risk, and no matter what great idea you have, it may never get realized. Secondly, I would take a look at data analytics and big data and really start mining that data to understand your customers or your employees or your partners so that you can have
70% of data goes unused.
Well, this is the thing. That's why we have to get more automated, and AI comes into the picture, because you have to remember big data and AI are super close cousins. You can't build if you build an algorithm that has limited data, I think you're going to have a very weak learning algorithm.
CA Technology CEO Mike Reguar there speaking to Bloomberg in Davos. And we are getting more headlines about President Trump supporting more so-called dreamers. These are children brought into the United States as children, immigrants brought into the United States as children. 3 White House officials confirming to Bloomberg that President Trump would sign an immigration plan into law that would give as many as 1.8 million of these dreamers a pathway to citizenship. This would be some sort of a concession to Democrats as they try to agree on broader immigration reform. Remember, he's also asking Congress for a $25 billion trust to pay for a southern border wall. We're going to continue to monitor these headlines as they come in. Meantime, back to Davos and billionaire investor George Soros delivering remarks there. Bloomberg was there exclusively. Hear what he had to say about the social media giants.
They claim that they are merely distributing information, but the fact that they are near monopoly distributors, make them into public utilities, and should subject them to more stringent regulations aimed at preserving competition, innovation, and fair and open universal access.
And here's what Soros had to say specifically about Facebook.
The network effect is truly unprecedented and transformative, but it's also unsustainable. It took Facebook 8.5 years to reach the first billion users, and half that time to reach the second billion. At this rate, Facebook will run out of people to convert in less than 3 years.
George Soros went on to say that Facebook and Google foster addiction, threaten independent thinking, and risk empowering state-sponsored surveillance, saying they can be very harmful, particularly for adolescents. And we're going to be talking a lot more about tech addiction coming up with Tony Fadell, co-founder of Nest, former Apple executive who believes that all of these tech companies have a real problem. This is Bloomberg. This is Bloomberg Technology. I'm Emily Chang. Back to our top story. Intel out with an upbeat quarterly and annual sales forecast, even as the entire chip industry scrambles to fix a vulnerability in its PC and server chips. Intel shares gaining over 5% in extended trading. The stock gained 27% in 2017, lagging behind the 38% advance in the Philadelphia Stock Exchange Semiconductor Index. Intel CEO Brian Krzanich spoke on the call just moments ago, saying the company has made progress on the security issue and still has a lot of work to do. The call is still underway. The company is saying it fully expects to be profitable for the whole year of 2018. Well, the topic of tech addiction is grabbing the attention of parents, teachers, and even tech giants. This includes consumer hardware veteran Tony Fadell. Serious concerns continue to circle the tech industry about being addicted to your smartphone or being absorbed by social media. We sat down with the former Apple and Alphabet exec and asked Fadell, who also co-founded Nest, how he's handling this issue as one of the creators behind the original iPhone.
I look at this as a whole set of unintended consequences that allowed kids and adults, this is not just a kids thing, it's adults, to be on them all the time, if they so choose. And so what we do is we have things like tech-free Sundays, where the family is off of electronics, including the parents, and we do other things together. Not that tech's bad, but there's times when we should just be face-to-face and talking about things and doing things together without screens sometimes coming between us. So we do that. We have screen time limits. It's difficult because we don't have many controls today to do that. And we also look at our behaviors with screens at night. Are the screens in the kids' rooms or not? Are the screens in the parents' rooms or not? These kinds of things to understand that moderating use of these devices.
What do you think the actual impact is on adults and, even more importantly, on children?
Well, I really look at this as I'm not a researcher. I'm not a doctor, so I'm not looking at it as the addiction per se. I have seen stories, and I have friends who've had kids with addiction issues, as well as adults with digital addiction issues. But I really look at this as, we need to have tools and data, information to allow us to understand how we consume digital media. And if we look at this and draw the parallels with something like food. Think about food. Today we have scales, so we can measure our weight. We have nutritional information on the side of boxes and different foods, so we know what's in there. We have programs to allow us to control our eating habits. We have definitions for words like what's a protein, right? So what's a protein in a digital world, right? Is a protein a digital educational app? Or is a sugar a social mobile app? is something like water, like like the camera app. These are the kind of things where we need to build nomenclatures around these kinds of habits and start to talk about them instead of just saying it's addiction or not, it's lots of usage or not. We need to get finer grained language and start to understand that the iPhone is just a refrigerator. It isn't the addiction. It delivers food, and we can then choose to pick what we want, what's a protein, what's a fat, from that refrigerator, and then hopefully consume it in the right portions. And then we have a scale to measure ourselves for seeing how much we've consumed each day or each week.
The business models of these companies are predicated on how long we use their products. I mean, do you think Facebook should be telling us how long we've been using Facebook? Should Apple be telling us how long we've been using the iPhone?
Well, first, I think not all of the business models are based on how much screen time you have, right? So some are and some aren't. You have to look at the individual business and figure out what their key metrics are for how they drive their revenue. So I know back in the day when I was at Apple, that was not a revenue driver, was how much screen time people were using, right? And so for Apple, it's more about selling more devices. So if you think about it, I think that users will buy more devices if they have the information and control over those devices. I know a lot of parents consider, should I buy them a cell phone or not, or a smartphone or not? Should I buy them a tablet or not? They would buy multiple devices for themselves, for their family, if they knew they could control them. Today, they're wary because they're like, oh, I have to collect all these devices before they go to bed. I have to set controls on all of them. These controls become cumbersome, extra devices become cumbersome, and I think that's limiting the business potential for a device manufacturer like Apple.
What about Facebook, where the business literally is the more you use Facebook, the more ads we can show you, the more money we make?
Well, I think about Facebook. First, my kids are under 11. They do not have Facebook accounts. They don't have any kind of social mobile accounts. Not allowed. Our family doesn't use them. But at the end of the day, you need to look at the contents of social mobile apps. What is a protein? I think there's a great protein inside of Facebook where you can connect with your family and friends and share stories. Is there a nicotine or sugar component here where there's stories and other ads and other things to distract you, right? So I think we need to look at each app and think about its benefits and its distractions. If you think about it, I get all kinds of different emails to get me to re-engage with certain apps. Or notifications like, hey, did you see so-and-so posted on this? Those are interruptions. Those are kind of like, dopamine hits to get you to use that app more. This isn't something that Apple did. This is something that social mobile apps want you to engage with. It also happens with YouTube. It also happens with games with in-app purchases, or these games that need you to stay around a long time to use them. Or where there's advertising-driven models. So we have to look at each app and understand what is good about it, what's not good about it, where's their interruptions, and then be able to then assess for ourselves which apps we should put on our phones or our tablets, as well as onto our kids.
Have you ever had any personal moments of guilt, like a Frankenstein-type moment, where you say to yourself, oh my goodness, what have we built?
Well, I think, at the end of the day, you look around and you go, my God, the massive amount of the population, over half the world, I think now, has a smartphone. And you go, you're in awe of that. And I think that's great. But there are unintended consequences that come with these kinds of things, and we just need to work on them. If we look at it, there were app stores, and we have great app stores today. And when you look at the app stores, there's certain things that are inside of an app store, especially the Apple App Store, and certain things that aren't. There aren't gambling applications. There are kinds of applications where you can get addicted to, losing your money. But we also have to think about that in terms of what, like I said, these social mobile applications or some of these other ones that have different non-beneficial customer metrics for their revenue. So yes, I always worry about how to improve the technology, and in this case, we have unintended consequences. These are easy problems for the platform companies like Apple and Google to solve. This is not like self-driving cars. This is 10,000 times easier to implement and cheaper, but it can give lots of control and instill consumer loyalty and trust in the brands for their families and for themselves if they can get information and control over their digital consumption.
So give me some specifics. What do you think Apple and Google should be doing?
So, well, specifically, I think that the first thing is they already have all the information across all the devices that you use. So you can have a iPhone, an iPad, an Apple TV, a Mac laptop, and between all of those things, they know how much we're using, how much we're emailing, texting, browsing, these kinds of things. They can easily give us back a calendar of events, just like they do on the Apple Watch for how many steps, how well we sleep, how our heart rate's doing. They can do the same thing and give us our digital information and metrics about our day in a life of the digital world. So it should be a combination in a calendar showing our history of physical use, as well as a physical use of our body, as well as digital use of our devices. And so we can just see how much we're using these devices and then moderate our behavior, saying, oh, that seems like we're doing too much. Or in my case, I'm not using my French language app enough to learn French. So I would love to be able to set goals and set controls on this data to allow me to specifically control how I use these devices. I'd like also a way to set my device so when I'm listening to music, I'm not interrupted, being buzzed, or another notification coming in. I just want to enjoy my music without interruption like I did in the old days with an iPod. Or when I'm reading, I don't want to be disturbed. But today we have all these different notifications coming in, all these different interruptions. I would like a single-purpose device sometimes. Well, we get all these notifications. Right when I get it, I would like to say, never give me this notification ever again. And when that happens across all of the platforms, so that I don't have to get disturbed about it and I don't have to go to every single device to turn off these notifications.
You're not just anyone, Tony. You could probably get Tim Cook on the phone in 10 minutes. Have you told this to him directly?
I've told it to multiple people inside of Apple, and I look forward to talking to Tim about it as well. And so, I'm looking forward to that conversation.
That was Nest co-founder Tony Fadell. Coming up, she is one of the most high-profile female venture capitalists in technology. We will talk to Aspect Ventures' Jennifer Fonstad about the fundraising environment and diversity. This is Bloomberg. Aspect Ventures, an early-stage mobile-focused investment firm that has a broad portfolio, hit a milestone this week, raising $181 million for its second fund. The fund has a high-profile backer in Melinda Gates, and it now stands as the biggest VC fund created and run by women. Jennifer Fonstad, managing partner and co-founder of Aspect Ventures, joins me now here in the studio. And I remember when you and Teresa came on the show talking about raising your first fund, and I'm so curious how the landscape today is different, if it's any different. How did this fundraise compare to the last?
Well, we were very lucky. We had a number of our, in fact, all of our Fund 1 investors came forward and participated in Fund 2 with the addition of a couple new investors. As you mentioned, Melinda Gates, who has been very high profile in focusing on women in tech. Our story really resonated with her, and our track record resonated with her. So she joined in, as well as did Cisco Systems.
So Melinda Gates is obviously Melinda Gates, but what does she bring to the table?
Well, so Melinda has been very vociferous in her support of really driving diversity into the tech community, and she's been focusing particularly on women. Our fund, though founded by women, is actually an investor in men and women. We are gender neutral in how we approach. However, as a result of our networks and how we think about building teams and how we think about how important culture is in building teams, our portfolio itself has become quite diverse. So our Fund 1 portfolio is about 40% women founders, has a woman as a founder. It's about 30% minority, and actually 50% are immigrants or children of immigrants.
So that was my next question is, if there were more women investors out there, how would the companies that get funded be different? I mean, we might see, a greater diversity of the people getting funded, but what about even the kinds of companies that get funded?
I think that's a great question. We're really, what we believe actually is we really see ourselves more as a next generation firm, which is really focused on investing in companies that are more reflective of the communities in which we live, as well as the customers in which we live. And so, as you see, there's a lot more there's a lot more customers where there's women or folks of minority or immigrants that are the purchasers, whether that's on the consumer side, even in enterprise and more broadly internationally. And so we see that the real opportunity and the real competitive advantage we have by having these broader networks is by investing in more diverse companies with these portfolio that reflect the underlying communities in which they're operating. They're actually going to be more successful, and they'll deliver better returns.
What is the sense that you're getting from LPs, the investors who invest in venture capital funds like yours, about how much they care? I mean, my understanding is that LPs really haven't cared about diversity very much. They care about returns. Is that changing?
Well, I think actually the real message is that we think that you'll have better returns by investing in diverse companies. And in fact, there's been a number of studies that have shown that, everything from McKinsey demonstrating, women-run companies with 15% better performance, minority-run companies 35% better performance. You have Google, who has done a lot of research around this to find that better performing teams have more diverse teams in them. And so we actually, the thesis that we have continued to understand, which Melinda, by investing in us, really appreciates, is that it actually delivers better returns over time in our portfolio. And Teresa and I have a 20-year plus track record of delivering strong returns in the tech community, and we think this will give us an additional edge.
There have been a lot of revelations about sexual misconduct in the VC community by male investors, often geared toward female entrepreneurs. I know that you guys are doing a lot of work behind the scenes to figure out ways to combat this. There's been talk of like a third-party sort of HR organization where people could file complaints. What progress is actually being made there?
I think there's a lot of interest across the community by men and women to really try and drive this out of our communities. And so there are a number of ideas. There's a working group several working groups that are coming at this, men and women involved, that are approaching it from an HR challenge to enable a third-party access for those who feel discriminated or harassed that can approach that group. We've talked a lot about delivering pledges, but I think all of these things really are important and critical, and we're still at the early stages of many of that. But I also think that it's about building strong cultures from the ground up. So some of the most successful companies, one that I was involved with early on, Athena Health, many years ago, I think did a fantastic job of building a very cohesive culture that allows for strong voices and diverse voices to come forward, because ultimately better decision making is where you're working in a safe environment where you're considering diverse opinions, and those are being considered in the final decision process. And so that's where we focus our time, and we think ultimately how that will drive change in our community.
What sectors are you interested in right now? I mean, you used to work at DFJ, you were investing in solar, they're investing in space, electric cars. What do you think are the hot sectors of the future?
Sure. So we have about a quarter of our portfolio in cybersecurity. That was about a quarter of our portfolio in Fund 1, and we expect that will be a big theme. I know in Davos, I think you had discussed earlier, is continuing to be an important global thesis. And we have a lot of experience in looking at cybersecurity from a number of different angles, from IoT to how the threat vectors in different dimensions. So that's a key area for us. AI is another area where we've been doing a lot of investing. Companies like Troops, Astra, which is doing it for email. Troops is just doing it for sales teams, where we think that using machine learning as an adjunct, companies like Vita Health for healthcare, really can drive better outcomes for those companies and better experiences for the end consumer. So those are some of the areas. Blockchain is another one that we're looking at, but primarily around solving business problems as opposed to some of the asset-based plays that you're seeing in the Robinhoods of the world. So that's more of our angle.
Well, congratulations. Great to have you back here on the show. Jennifer Fonstad, co-founder of Aspect Ventures.
Thank you very much.
All right, still ahead, watch out, Waymo. Apple is expanding its self-driving test fleet in California. We'll have all the details next. This is Bloomberg. A story we are watching, Google has reached out to Jake Sullivan, a former deputy chief of staff to Hillary Clinton at the State Department, in its search for a new head of international policy. Sullivan is one of more than a dozen contenders, and the discussions may not result in a job offer, according to people familiar with the matter. Google's search comes as the tech giant and its peers wrestle with the best strategies to deal with regulatory threats in Europe, a Republican-controlled Congress, and a White House that is suspicious of the industry's rising power. Meantime, Apple is expanding its California self-driving test fleet to 27 vehicles. This as the company accelerates efforts to catch up with competitors like Alphabet's Waymo. CEO Tim Cook acknowledged for the first time in June that the company had a team developing autonomous car technology. Apple has declined to comment about the latest DMV registrations, which occurred from July 2017 through this month, according to the California agency. Broadcom's hostile bid for Qualcomm got opposition from 3 of China's biggest smartphone makers. Xiaomi, Oppo, and Vivo, heavy users of Qualcomm-designed chips, are concerned R&D may suffer should Broadcom dominate the wireless semiconductor market. Meantime, Broadcom is confident the deal will go through in the next 12 months, saying there's no antitrust issue that couldn't be resolved. And that does it for this edition of Bloomberg Technology. A reminder, we are live streaming on Twitter. Check us out at Technology, weekdays, 5 p.m. in New York, 2 p.m. in San Francisco. That is all for now. This is Bloomberg.